Great address, thank you. You make what I think is a very good point regarding culture and risk aversion as being critical. Certainly capital's a big part of it, but culture and risk aversion are sort of baked into what we are as Canadians. How do we change that? I mean, what are your thoughts in terms of trying to sort of move that forward and becoming both sort of at the C level, as you say, but more broadly in business and frankly academia, more risk taking?
You know, it's a tough question because it's one of the challenging parts, if you will, of Canadian culture. It's also one of the endearing parts of Canadian culture, and you know, when you look at the financial crisis, it's amazing what some of the pundits in the media or in the analyst community say. I mean, it's everything from the fact that Canadian banks are boring and dull to the fact that we're smarter, our government officials are clever. But it is partially a result of what you say, a slightly different culture of, I think, a little bit more conservative nature. And I think to some degree that served us extremely well. But it provides some challenges as well. I don't think there's any easy solutions other than continue to chip away at the various programs that we have. As I say, I look at MaRS, and when I come into this institution, which I do quite regularly, I don't see that culture. I see it more in the building that I leave when I come to MaRS. But when I come to MaRS, you see an incredible amount of thought leadership, innovation, the willingness to take risks, the willingness to put one's career on the line to achieve something else. And I think we have to find, as I say, programs to develop and to encourage that kind of culture. The other thing that I would say is, and I don't want to harp too much on immigration. I obviously have a very biased stance on that, but I think this is a country that to a large degree has been built by newcomers to this country willing to take risks and take chances to find a better world. And I think we have the ability, through the encouraging of bringing, smart people and intellectual capital into an environment like Toronto, which, as I say, is a mosaic of wonderful cultures, a leader in the arts, a leader in financial services. It has so many qualities. I think we have to throw a lot of those types of things. And I think if we do and we can bring it together, I think you'll start to see that culture shift a little, and you'll see Canada become a little bit more aggressive. To some degree, I think our conservative nature is a little bit of a victim of our own success. I mean, as I said in my early remarks, there are a lot of natural blessings that this country has had, and to some degree, the conservative nature is because things have tended to come easier to people in this country because of the abundance of natural resources, etc. I think in the new world that will change, and I think we've got to find ways to adapt to that changing culture.
I just have a quick question on your comment that you said was a very important comment. Maybe you can elaborate a little bit on that. The comment was about banks investing in companies. What about investing in venture capital firms?
Well, even there, it's tough, and this is not an excuse; it's a reality of the business that we're in, and this is where I think there's a lot of misconceptions out there. Obviously, I look at it through biased eyes, but you often hear things like banks aren't lending enough to small business. We're trying to lend as much as we possibly can to small business. The problem we have is there's not enough demand. I mean, it's demand an issue as it is a supply issue. When it comes to equity investments in early stage companies, there are two or three things that make it extremely difficult for banks. The first one is knowledge. I mean, we're not venture capitalists; we're bankers, and I think when you pretend, they're very distinct roles, and I think you have to be very careful about mixing those roles. The other issue, as I said earlier, when you look at today's environment, it's even harder because a combination of accounting rules and regulatory rules make it extremely difficult for banks to make equity investments. What the accounting rules have basically moved you towards is that it's very punitive to make long-tail investments because banks tend to trade on quarterly earnings, and as you make longer-term investments, there's basically you've got these mark-to-market rules, which means you record losses on these investments until you ultimately achieve a profit. And we're not structured that way. And from a regulatory perspective, the regulators are looking at businesses like private equity, which is what venture capital is, and saying we don't want our banks to be in that business because there's more risk associated with that business than we want the banking sector to carry. So if you look at the United States as an example, the Dodd-Frank legislation, there's actually rules in there that will prevent banks from being in the private equity business moving forward. Now, we can have fund-to-funds investments, and we do have some third-party fund investments. But again, they tend to, from an accounting perspective, they're very sort of user unfriendly. The banks, as I say, the role of banks in terms of capital formation is not naturally as an equity provider. We all have businesses, as I said, we've looked for ways to play it as much to contribute to this issue. I mean, the reason we're an investor in the Ontario Venture Fund is not because we think we're going to hit a home run from an investment perspective. Part of it, as we've said, we're going to apply $60 million to a fund that hopefully will be helpful in terms of solving some of the issues that we're talking about this morning. But it's not a natural thing for a bank to do. I mean, it hurts us from a financial perspective. It doesn't, it's not good from a shareholder perspective. And so to expect banks to continue to make major commitments to that in today's regulatory environment is very challenging. That's why we've got to find ways to develop more forms of private equity as opposed to bank investment. It's a challenging issue.
Gord, Andrew Bell of BNN. You mentioned that Canada has in the past kind of taken the relatively soft option of just relying on natural resources. Right. I want to, if I could ask you just a two-pronged question. One is, do you find it a bit depressing that the big business story of the year is this battle over potash, which Canadians didn't put there, Mother Nature did? Right. And the second thing is, if I may, what do you think, should Ottawa allow this takeover of Potash Corp by BHP?
Not only wouldn't I answer that question in private, I certainly wouldn't answer it with the television cameras on the roll. I have an easy excuse. We are an advisor to Potash, so I am prevented from making any comment one way or the other. I think that there's a couple of interesting points in there. I think that the abundance of resources has obviously been a huge value to this country. It's been a value in many ways. It's provided economic growth. It's provided jobs. Extremely importantly, it's provided a lot of the fiscal positives that has enabled Canada to outperform over, particularly throughout the financial crisis. I mean, again, call a spade a spade. Our governments have been running major surpluses, and one of the reasons for those surpluses, particularly in a province like Alberta, is because of the abundance of resources that we have as a country. So it's been a real positive. I would also say, although I would say we haven't done enough of it, that in those industries we are a leader in technology and IT and R&D investment. And so if you look at the energy industry, we should be doing more, particularly around environmental issues, as we talk about on a regular basis. Like Northern Alberta, we should have invested significantly more at a much earlier stages. But we do have an industry that, from an R&D perspective, is a leader because of those resources. But it has created a tendency, as I say, for us to be a little bit complacent around other areas. One of the challenges with industries like that is they don't employ a lot of people. One of the topics of today's meetings is jobs. The resource industry provides a lot of money. It provides a lot of revenue. It doesn't provide a lot of jobs. If we're going to solve the issue of jobs, and again, reality, it's not as bad in Canada as it is in the United States or Europe, but jobs is going to be issue number 1, 2, and 3 for the next 10 years in the developed world, because we do have a jobless recovery occurring. Now, I'm not sure we have a recovery occurring, but it's certainly jobless. And if we're going to solve that job issues, it's not going to be through resources. It's going to be through small business. It's going to be through industries like IT, healthcare, the knowledge-based sector. And so if you look at the future as opposed to the past, there's no question that complacency has been a problem, and it's something that we have to work towards solving.
One last question. Joe?
Well, that comment on the resource industry is a great segue into my question, which is going to offer somewhat a contrarian view to the question about Canada's risk averseness and shortage of capital. And I manage a small oncology startup company, and I'd like to offer sort of the story of two hypothetical companies. One that's just signed a license with a hospital or university here on University Avenue for a new target in cancer that could be a significant therapy to cancer. And another hypothetical company that has a lease on 100,000 acres or whatever it is in northern Saskatchewan that has a favorable geological report. So good preclinical data on cancer, favorable geological report. Two companies, similar risk profiles, out looking for capital. Which one is likely today to get financed? I think the company with the favorable geological report will have no trouble raising capital. Canadians understand that risk profile. They're willing to invest in that. They're not requiring governments to put up the money. Why can't the company with the potential therapeutic for cancer fare the same way?
Right.
I think that's a real more Canadian fundamental question.
Yeah, no, I think that's a great point. I think that plays into the complacency issue. I mean, in reality, if you look at our public markets, I mean, you're talking about a slightly later stage, but if you look at public markets, you know, we're far more comfortable doing IPOs on junior mining companies or oil companies with potential assets in the ground that are being explored than we are, you know, industries like you're referring to, whether it's healthcare or whether it's technology. And I think to some degree that is a little bit gets into the nature and the culture of the country. And I think that's one of the things that we have to work to change. But what I would say, you know, maybe I'm an eternal optimist, but what I would say is that smart money will always find good opportunities as long as we open the roads and the avenues towards those connections. And it's, you know, I've always been, and people will disagree with me, but this issue of venture capital, which is a big problem in Canada. I truly believe that smart venture capital money will find great opportunities in Canada. What we've got to do is make sure that they're not disadvantaged from an accessibility perspective, from a tax perspective, et cetera, because the money will ultimately find those good ideas. So if there is a good idea in terms of the first example that you use, in theory, if we create the right environment, money and investment will find that opportunity, I believe. And that's one of the challenges, as I say, that we're here today to talk about, is how do we create an environment where we make it easier for those connections to occur, and we create an environment where from a national mindset perspective, we are more open and more willing to look to that sort of future component of where economic growth is going to come from, which is more the former example as opposed to the latter example. Thank you very much.
Well, ladies and gentlemen. Thank you very much, Gord, and not just being so generous in your comments and participating in the question session, setting the tone for openness, but I think on behalf of everybody here for your ongoing leadership in putting Canada's banking system on the global stage and your commitment to innovation. Thank you.